Bitcoin crashes to support at $60,000 today following the launch of Hong Kong ETFs and the sentencing for Binance's former CEO. In today's episode, we're going to discuss how much lower it could go and where the support really lies at. You're watching the Bitcoin Minute. I'm Joseph Wagner, and welcome to the Rabbit Hole. Just by a quick look at the charts, we can see that historically there was resistance right here at $52,000. Let's call it $52,500. That's where I think Bitcoin will ultimately fall to in the following days to weeks. If we put up our Ichimoku cloud, we can see that we broke through the cloud as well today, which is a very bearish indicator signaling further price correction could be on the way. One way to measure how far the sell the news aspect of Bitcoin's correction could take it, we can look to the launch of spot ETFs in the US. These ETFs were much more anticipated and control much more of the market share. We still had a 17% correction within 2 weeks of the launch, almost 18%. So if we had a 17% correction from current pricing, where would that take us to? If we fell 17% from the open today and take into account today's 5% decline, we're looking at approximately $53,000. Other technical indicators that could signal support are our moving averages. At the low today, we just treaded right to the lowest of our major moving averages, the 100-day simple moving average. Some other tools we could do to forecast where this correction may end up is our Fibonacci retracement. Looking up here, you can see that 60,000 represents the 38.2% retracement, which represents current support, and the 61.8% retracement more or less represents 52,000, which is where I'm looking for Bitcoin to fall to. So there's a lot of indicators in confluence with the price of $52,000 as a support level that Bitcoin will test. Using our automated Elliott wave tool, we can see that Elliott wave is also calling for a correction. Our longest term wave count has just concluded its fifth wave and is looking to enter an ABC correction possibly. If we put in our shorter term wave count, it has just fallen below the C wave, indicating that this next cycle could be a bearish impulse cycle. And that is also confirmed with our shortest term wave count. Switching over to a weekly chart, when we take our shorter term fib retracement and move it to a much longer data set, we can see that 52,000 becomes the 38% retracement level. So there you have it. There's many short-term and mid-term technical indicators alluding to the price point of $52,500 as a support level that we will soon test. That's all for today's show. We'll talk to you next week.